Joining me now, Veritas Financial's Greg Branch, Michael Lee, Strategies Michael Lee, and Advisors Capital Management's Joanne Feeney. Joanne, let me start with you on this. Have you already begun to make adjustments based on a taper tantrum and inflation and the Fed ultimately changing course?
Well, we want to always be prepared for lots of different risks, inflation among them. I don't know that we want to think about the risks here of a taper tantrum like what happened back in 2013, 2015. And the reason is that we're in a very different economic situation right now, right? We're at the very beginning of what's likely to be a long-lasting reopening cycle, recovery cycle. And also, we have a lot more fiscal stimulus happening right now than we did back then. And as Powell has said, right, we needed both monetary support and fiscal support, and we finally now have a lot of fiscal support. So I think a withdrawal of some monetary stimulus isn't going to have the same kind of negative effect on the economics or of the market like it did back then. So right. I think that that's not as big a risk.
Greg?
Yeah, I think he's largely right. The other thing I'd point out that is different is that previously what we had is a dearth in the supply of jobs. What we have this time around seems to be a dearth in the supply of labor. And I'm not sure that the policy of low rates and easy accommodative policy will solve the latter. So I do look for some turbulence in the short time as the market digests what is likely a more inflationary environment than the Fed has expected, which means that they will probably change course sooner than has been expected. This is not a 2023-24 event. I would look for them to change posture this year, and I think rising rates are a 2022 event, but that does not detract from a strong earnings-driven back half.
So have you made adjustments based on the Fed changing course, or are you going with the market fundamentals that seem to be improving?
I think you can do both. In the short term, we're more liquid than we traditionally are because we think there'll be better buying opportunities as the market digests the Fed's change in posture in a more inflationary environment than we expected. But again, the second half, back half story, performance story is driven by growth in earnings far more than what consensus is projecting right now.
All right, so let's talk about the economy, because this morning we saw consumer spending holding up pretty good, even as incomes drop precipitously. Of course, far less government transfer payments. And the question now is, will consumers be able to carry this economy as fiscal aid begins to fade? And Michael Lee, if that's the case, where should investors be positioned?
Yeah, Charles, I think the consumer is actually, by and large, made it through this pandemic pretty well off. I think we're not going to see any more massive month-to-month spikes because I think we've seen the end of the fiscal stimulus. But I still think things like housing are going to continue to keep going. This is a multi-year trend. We dramatically slowed the household formation in the great financial crisis, and that's turned on its head. So people fixing up their homes, buying new homes, putting on additions. Once the lumber prices get a little bit more under control, I expect that to pick up even more. So I look at the Home Depot, Lowe's, and Target to be putting in there. And I see, although you still have 16 million people on government assistance from some form of unemployment, I still think that by and large, the consumer's in great shape. We have a savings rate above 10%. So a lot of room to run for the consumer as far as I'm concerned.
And of course, that 16 million wasn't long ago 32 million. Let's talk about earnings, because they are propelling a lot of today's big winners, including Salesforce.com. Looking ahead, Joanne, earnings for 3 or 4 weeks, I don't care how great they were, they landed with a thud. Most stocks went down, some went down sharply, even with great guidance. Do you think we'll get in a position now where these strong results, strong guidance, start to move this market higher ahead of the next round of earnings?
Yeah, I think obviously there are high expectations heading into this earnings season, and a lot of folks were looking to guidance. And so we didn't see, as much positive reaction. But when you have a long-term view, as we try to build into portfolios for our clients, you can be in something like a Williams-Sonoma, which continues to do well. Some thought that was just a reopening play, but we think some thought that was just a COVID play, but it's also a reopening play. But going forward, there are other opportunities. We've held a TJ Maxx for a while. We think that's going to be a strong reopening play. They're going to continue, we believe, to deliver strong results as they did. But their guidance was a little bit soft, and so the stock got beat up a bit. Mm-hmm. But there are other opportunities, ways to build in that inflation protection, right? That is still a risk, like a bank, like a Citi or a TD, Toronto Dominion. But also you still want to have some growth opportunities, because we do expect to see that pickup in earnings reports as we continue through this reopening. And that could be in the fintech space, like a PayPal or an Encino, or a big stalwart like a Google, which we think still has a lot of room to run.
Really? Okay. Hey, I got a special question for you, Michael Lee. I want to deviate for a moment from equities and get to crypto. Still a lot of instability there. I know you have been a fan. What do you say about what's happening now? Most long-term players in this space say this is just par for the course. Don't panic.
Yeah, Charles, absolutely. Look, this is an extremely volatile asset class. I still think in the last 10 months, I'm up over 300%. And any asset, at one point it was probably closer to 600. So these massive pullbacks is the historical norm for these types of currencies. And if you're someone trading it for fast money, good luck. But I will say, if you're a long-term holder, what's your original investment thesis for owning cryptocurrency? Is the government going to continue, governments worldwide going to continue printing money, or are they not? I think it's highly likely that the money printing press doesn't stop anytime soon, and there your investment thesis takes hold. There will be bumps in the road,
right,
but I'd say you want to be buying on the dips and dollar cost averaging in the same way you would in a stock portfolio.
Yeah, when you say the money printing won't stop anytime soon, I think you mean never. Hey, Greg, let me go back to you because you seem pretty sanguine and confident about things. Where's your main focus then? What's the main investment focus for you?
Yeah, I think Joanne actually touched upon a few of the sectors I like, although we probably disagree with the equities inherent in those sectors. So I'm looking for sectors that are somewhat immune to inflation, where I see consensus light on the back half. I like value retail, although I think there's a difference between those that have invested in their e-retail structure. They have a structural strategic advantage, and that differentiates the Walmarts and the Targets from the TJ Maxxes and the Rosses of the world. I also like the banks. While the multiples have caught up to historic average, we're not getting a steep sale there anymore. The earnings potential in the banks is far underestimated at around 60 to 70% of pre-pandemic levels right now. And so although the net interest margin environment turning positive lifts all boats,
right,
I'd still focus on those big money centers that have capital markets and investment banking behind them. And I also do have some growth stories. Even though inflation is worse for growth, there are a few select growth stories that I'm excited about that I think consensus is underestimating.
Yeah. I think everyone agrees it's folly to get rid of all your growth, particularly for maybe this short-term period. Great, fantastic stuff from everyone. I really appreciate it. Greg, Michelle, Joanne, have a great Memorial Day. We'll talk to you again very soon. Meanwhile, folks, Nigel Farage crosses the pond, and he's making stops across our country in his American comeback tour, touting if Britain can beat socialism, America can too. Well, he got here just in time. Stick around. He's next.